Good morning. It is a time for the variable rate update. So we wanted to give you really, I think, two quick things. Obviously, the Bank of Canada meeting is not to June 1st. There's going to be no change to your interest rate until that point. First thing is that I wanted to talk about is I get a lot of calls, people going, well, I've read a lot of articles, and a lot of articles are saying this. One thing I really want you to consider, and you can really apply this not just to mortgages and finances and the economy, but really to any product you're thinking about, and be sure that a mortgage is a product, a financial product being sold. Always check to see the source of who is behind the report. And what I mean by that is that a lot of these reports are being circulated by banks or people that profit from the idea from rates being higher or fixed rates. So always look at the source of the information. So banks do quite a bit better on a fixed rate as far as profitability over a variable. And that's always the case. That involves both the penalty calculation and the fixed rate over time. So, the incentive for them to want you to go to a fixed rate is very, very strong. So the vast majority of these articles are, the research and stuff is funded by banks. Now, I'm not saying that all banks are sketchy and all those things. I'm just saying that their motive is behind wanting to go to the fixed rate. So obviously their data, is going to want to support as much of that as possible. You can apply it to any product. If you're looking on the health benefits of certain food, if you're looking on lots of different activities, you'll find that lots of reports and articles you read are going to be solely funded by people that profit from those types of things. So look for unbiased opinions. By the way, and this is being totally transparent, I want you to also to know personally a few things that are important for you to know. First of all, I have mortgages, more than one, and they're all in variable. So all of them are in variable. I don't have any fixed rate mortgage. I don't have one fixed rate mortgage. And they're all variable rate mortgages. Two, as far as a mortgage broker is concerned, we get paid generally exactly the same for variables and fixed rates. So there's no compensation difference taking a variable or a fixed rate. And some lenders actually compensate us a little bit less when we give a variable. And particularly when they do big rate specials or rate pushes, they will compensate us less if we get a client to take a variable over a fixed rate. So I just want to be transparent on that as well. Because I think, that is an important thing to be aware of. Now, the last thing I want to touch base on is what's happened in the last week here. So last week, as kind of what I had thought, is we're looking at the housing data coming out, and we touched on this a little bit last week, the housing data coming out in from April being very weak in lots of parts of the country. Now, you may not be feeling it in your small town or wherever it is, but the data in the bigger centers, which primarily does influence these decisions because it's more of the average, those types of things. I mean, we often say, hey, we're being affected by big city policy all the time. Your markets have slowed, and in some places, as mentioned last week, values have dropped. So does that promote the idea that we could have interest rate increases? Probably, most definitely not. And now, I don't see off the table people putting the idea of a rate increase away for the beginning of June. So that's still very likely here. But, I think the runway has run out unless we see in 30 days that the market, just completely abandons that and, goes back to going up on all fronts. So again, if you have a variable rate and you have not had someone review it, we can look at a few things. First of all, we can look at setting and fixing that payment. So no matter what the variable does, payment does not change. Two, we can look at guaranteeing the variable. We can do a mortgage that has a guaranteed variable that your interest is going to be better no matter what than the fixed rate. Three, we can look at redoing the whole mortgage and repositioning. And certainly if you are afraid of the cost of things economically, there is a few different ways we might look at refinance. So if you're like, well, Joel, I'm not worried about the payment, but what if I have a situation where, I'm worried about the different debt I'm carrying or costs. We can look at refinancing. There is a couple products that have come out recently in the last few weeks where we might add, where we don't need to actually break your mortgage. We can just keep your existing rate and do another portion. We don't usually recommend those products, but right now we probably would. So if you have some stuff you want to go through, we'd love to help you with that. But that's your variable rate update. Again, please share this with whoever you might think this might be valuable to. and whoever you think this could be helpful for them. And please do subscribe to our channel. We're putting up other videos on there all the time. And have a great week.